What's good, future millionaires? We back with another banger. I'm DecemberDeMarco, Fortune 500 marketer, here to share my insights to the market with y'all to hopefully help y'all become better informed investors. Salute to y'all for pulling up on the channel. Make sure you hit that thumbs up like button for the YouTube algorithm, and do not forget to subscribe. Also, check the links in the description section of this video. I got some fire down there for y'all. Free resources, stocks, crypto for those just beginning on their investing journeys. Also, my book is on Amazon. You can check that out as well. Let me give y'all a book of the day real quick while we're here. We got the 22 Immutable Laws of Marketing. Violate them at your own risk by Al Rees and Jack Trout. So check this out. It is on Amazon. But we got some Shiba Inu technical analysis to get into. You know, I want to talk about what the market is likely to do, give y'all some tools to use, some indicators to use. This may be a first time for some of y'all. We're going to go over VWAP, volume weighted average price. We're going to go over moving average. We're going to go use our Bollinger Bands. We're going to also use our Fibonacci retracement. But first, I got to, do the plug for the courses. We got 3 courses on the channel that I created. I got my stock options trading course. This course will teach you how to trade options in the stock market Monday through Friday. So you can basically make bets in the market. Whether it will go up, you can say, I believe the market will go up, and you can make money from that. And you can also, on the opposite end, say, I believe the markets are going to go down right now, and you can make money from that as well. A lot of people don't know that you can make money betting that the market will fall down, and that's a very important skill to have in your arsenal. So I have a full course if you're interested in grabbing that, if you know that that's what you want to do. But I also, made an introductory class to options trading for those that aren't sure if they want to get into options trading. Right now, after this video, I'm going to be letting the first 5 people to reach out to me get access to my introductory options trading class for $100 each. This is a $500 class minimum, but I'm gonna let the first 5 people grab that for $100. You got to email me ASAP, DecemberDeMarco@gmail.com, if you want to get the introductory class for $100. You could take that class. You'll learn how to trade options. You will learn how to make money. You'll learn what to watch out for. You'll learn the things you need to do with options trading. Now, the only difference between the class and the course is a much more full in detail training session. So you'll be able to see me trade live, make real money live in the markets in the full course. But in the class, we more of go over everything and talk about the things. I walk you through how to trade options and all that stuff you need to know. Also, we got the crypto 101 course teaching you how to have a well-rounded understanding of cryptocurrency investing from that beginner to intermediate level. Also, is some advanced things in there as well that you can check out. Again, DecemberDeMarco@gmail.com if you're looking for that. And then we got my technical analysis course, which will teach you how to interpret the data on the chart. So for those of you that don't understand VWAP, moving averages, Bollinger Bands, RSI, MACD, fib retracement, things like that, I'm going to be teaching you how to understand all those things and use them and what they mean inside of my technical analysis course. So if you're interested in that, reach out via email, DecemberDeMarco@gmail.com. Now, let's get into this SHIB update. We got to talk about, a few different indicators that I want y'all to be familiar with and understand how to use. So right now, let's take a look at the overall market real quick before we zoom in on SHIB and start doing some TA. So overall market at 1.01 trillion. So we can see about 2 billion or 0.02 trillion has left the market so far. We seen this up at 0.03 at its sometime yesterday. So down 0.84% right now. Taking a look at Bitcoin at $20,635, down 0.89%, still up 5% for the week. Ethereum at 1590, down 1.7% for the day, up 16.6% on the week. We got BNB at 313, up 3% for the day and up 3.5% for the week. XRP at 45 cents, down 2.5% for the day and down 2.2% on the week. And Doge 11 cents right now, down 3.6% on a day, up 95% for the week, y'all. This is why dollar cost averaging really pays off. You'll catch the runs like this. Someone who might have been waiting on the sidelines for the perfect thing to play out with Doge might have missed that. But if you've been in and you've been having time in the market, then you're likely going to catch all these runs that we see take place that sometimes people jumping in and out might miss. So Cardano 40 cents, down 3.4% on the day, up 12% for the week. Solana $32.95, up 0.25% and up 12.4% on the week. And then we got Matic at 90 cents, down 2.7% on the day, up just about 1% for the week. And let's just skip straight to SHIB, y'all. at that 1193 level, down 7.6% for the day. So we can see on the top 13 coins, Shiba Inu is down the most right now. So let's take a closer look and try to determine what's playing out. So first thing we're going to use, I want y'all to be familiar with, is the VWAP. VWAP stands for volume weighted average price. So it's the volume weighted average price, exactly what it says. So one thing about the VWAP is it's not that good of an indicator to use on the daily chart, because it doesn't really give you see how the line is like right in the middle of all these let me open this up. See how the line is right in the middle? It's kind of hard to see, so it's better for intraday use. So not even a 4 hour right here do you want to use. Maybe even go down to the 1 hour for the VWAP, especially with SHIB. Let's remove some of these extra lines. Take off that upper band just so y'all can see this a lot more clear. Okay, so now the VWAP acts as a trend line. So people in the market, traders, day traders, they usually look at the VWAP as a line to determine which direction the market is heading. So basically, if the price or the candles are trading above the VWAP, usually traders are in the mindset that the market is in an uptrend. If the price or the candlesticks are trading below the VWAP, then the traders are in the mindset that the market is in a downtrend. So if we take a look where we are right now, just looking at this area, we can see basically the price is trading underneath the VWAP. So right now we would technically, consider this to be in a downtrend. So also we want to, use some more indicators. That's just one indicator you want to use. You can pair these indicators on top of each other. Shout out to everybody reaching out to the channel. I will tap in with y'all as soon as this video is over with. But let's add another one. So another indicator that pairs nicely, we got Doge up 5% in the last hour. But another indicator that pairs nicely with the VWAP is the moving average. So let's type that in. So this is basically giving us a price moving average. It's letting us know how the price is moving on average. So we want to use the 200-day moving average as that indicator, because a lot of traders look at that 200-day level as a very strong support or resistance area in the market. So we're going to take a look at what happens here with SHIB. We're going to see also what happened with that breakout that we seen where SHIB just went absolutely crazy. Notice how this line down here is the 200-day moving average. So it's basically giving us an average of the last 200 days on where the price is. So if we see the price above the 200-day moving average, that's usually going to find support at that point. If we see the price trading under the 200-day moving average, we're usually going to see resistance at that point, or people take sales at that point. Above it, at that point where the price retraces right there, we usually see people take buying positions or go long at that point. Now, take a look at this here. Let's zoom in. Okay, so notice how, let's just go here. So if we look in here, we can see the price really very, very choppy, really like kind of trading sideways, not really giving us anything, too strong. But what traders were watching for is the price. You see, it was getting near this 200-day moving average right here. So investors are looking at it. Okay, every time it gets to this level, we start to see, people sell off because the price is under the 200-day moving average. When it's under that, as the price moves up towards the 200-day moving average, it acts as a resistance point. But something happened here. We broke the 200-day moving average. Notice how that happened here. We broke it. Price traded back underneath it. But also, not only did the price break the moving average, the price began to trade over the VWAP. So let's zoom in a little closer just so y'all can see that even better. So right here, we got the price trading above the VWAP, and it also broke the 200-day moving average. So that's very, very bullish. So people are watching for this area in the chart to, to give us some type of indication. So notice it plays out. The price drops back under the VWAP, under the 200-day moving average. People sell it at this point. People started to take profits or sell into put positions or short positions at that point. They push it down, push it down, push it down. It's trading under the VWAP. Remember, this little blue line right here is the VWAP. So the price is trading under it. But then at some point we see it break over the VWAP, come back under. It breaks over the VWAP again, which tells us that the market is moving in an uptrend. But also something that happened right here. This is why this movement got extremely bullish, because this was the point that the that the price broke over the VWAP and also broke over the 200-day moving average. So with those two things lined up together, that was a strong buying signal for investors, and that's where we seen a lot of people go long at, and they went long, and you can see price broke out above, retested these areas that we were looking for. When it first broke above the 200-day moving average, we got that. People started to sell off at that point, but notice they sold off. They let it come, use the VWAP as a support level. It sold off, used it as a support level, and continued to go up, and it absolutely just took off at that point. So this is why it's important to learn how to use these indicators, because then you'll be able to determine, when is a good entry point, or where other investors are likely to use it as an entry point. Now, also, let's look a little further. Some people, the people that were watching it the closest, this is where they went long at. It retested here. They went long again. Now, this is what really made it bullish. When the price, saw its high right here, it started to sell off, and it found support again off of the 200-day moving average. So everybody that didn't act quickly or, prematurely, those second group of people waited for around. Some people retested here. Some people waited for that pullback here, but it would have been better for this area here because it's testing the 200-day moving average. Notice how right there at that point, and it always can be above it or a little bit below. It doesn't always have to be exactly on it. It could find some support or resistance, a little bit away from that line. But we got the 200-day moving average here. I'm gonna make it red. So basically here, so a lot of investors went long at this point, and that's when we really seen the price blow up and then trigger the event that we seen where it took us all the way up to this 1500 level. Now, what we're trying to determine now, let's remove some of these marks that we made on the chart. Okay, so now what we're looking for is to determine where the price will pull back to. So what we'll use is a tool called Fibonacci retracement. So we'll grab our fib retracement tool, and the way we use this is we measure from the swing low to the swing high. Now, a lot of people will say different areas, but usually what we're looking for is the high point and the low point after this high point that we seen here. So we're looking for the swing low to the swing high. So we'll grab from right there and we'll measure it to the top of the wick right there, and we'll look at this area here in the chart to determine where the price will likely find support. So we got the 23.6 level, we got the 38.2 level, we got the 50% level, we got the 61.8% level, and we got the 78.6 level, and then we got that 100% level here. So looking at this, each one of these lines act as a support level. It acts as a level that tells us where the price most likely might pull back to, and also where we can target entries at as well. We can decide, okay, we can see that here's the swing high, here's the swing low. We can say, at that 50% level, at a 50% retracement, that's where we want to go long at. Notice how a lot of buyers right at this point here, you notice how the price broke out, it touched this area, it pulled back, and it found support right around here. That's because this is the 50% retracement level in the Fibonacci, with the Fibonacci tool. So a lot of investors or traders understand this, so they're using this area as an indicator to buy. So when they're waiting for it, they see this breakout, when they see the high, when they see the price start to pull back, they say, okay, let me pull out my Fibonacci tool and determine where it's likely to pull back to. When they see this 50 level, they might say, okay, I'll take a position here at this 50 level. Now they did that, seen the price pump up to that resistance level of that 23.6 number, and then it began to sell off again. Notice where it found support at this time. It found support around that 61.8 level. So the first time it found support here. Second time it found support here where you could see buyers went long again. Unfortunately, it didn't last as good as this run. This run took it through, one resistance to the next resistance. This one, where buyers went long the second time, it only went to that first resistance and continued to sell off. So it tested the 61.8% level again, and it continued to pull down until it got around this 78.6 level. Each one of these lines are considered a resistance point. Now we know that if it crosses that 50% level, it's likely the price could continue in a downtrend. It could turn bearish. So we did cross that. So we're watching for, we're trying to be, mindful of that as well. We see the price pull back below this 50% level. Now we kind of just want to let it play out and see what it does, and we try to catch it, along one of these support levels. We already seen it break below this support level here. So best bets, even though buyers did step in and buy it here, because they looked left in the chart and they could see that we had some support around this area. So those were the investors that were trying to beat the timing. They were trying to time it perfectly. But we could see they got a little pump, and it found resistance again back at that 61.8% level, and it began to sell off again all the way until it got kind of close to this 78.6 range. Remember, each one of these levels act as a support, and it doesn't have to fall exactly on it, but that's very close. The Fibonacci has it marked at 1136, and we seen it pull back to 1156. So basically 20 points, from that support level, so that we can call that close to finding support there. So this would technically that's why we've seen some buyers step in at this point. But the thing we're also looking at is the price is still underneath the VWAP. So this is telling us that it's in a downtrend. So it could likely continue to push down even further to come test this area again. So that's what y'all want to watch out for until we get support. Until we get this support in, the VWAP and the 200-day moving average kind of matching up. That's when we know most people in the market are going to use that as a really, really strong support area, which means they will likely buy in at that point. But right here, we might see the price taper off a little bit unless we get some type of good news. We might test right here around the 78.6 level for 1136, or we could even pull back, which would, be even better discount to around that 1095 level. The chart has it at 1094. So our moving average will be around that 1094 level. So we're looking at trying to find confirmation on a couple different areas where we can basically set our buy orders if you plan on going long again. Now also what we can use is our RSI, relative strength index, to determine how strong is this right now. So we can see we are at a 44 right now, which is usually when we see 35 and below, that's a sign that it's oversold. When we see 70 and above, that's a sign that it's overbought. So right now it still has a little room that it could potentially cool off. Even if we look at some of these low areas, we can see it pulling back to around that 35 level, which may give us that price action down to that 1093 level, or even back around to that 1137 level. So keep that in mind. Once we get closer to this 200-day moving average, that's when I assume more buyers will step in and we can see the price pump again. So watch out for that, y'all. Don't say I ain't tell you. Now, of course, we will, if we break out of this area, and things go bullish, then we will retest these areas again, back around this 15, I'll just rough estimate 1523 level. But that's all we got for this video. I just wanted to introduce y'all to a few different indicators and tools, teach you how to use them, teach you what they mean, and how you compare them together to, determine what the market is likely to do, or to time, or, try to wait for your entries. But let me know in the comment section if you appreciate this type of information. I know this video was a little longer, but I really want to drop a few new indicators on y'all. Also, let me know which one of these indicators are your favorite, or which one you like me to talk about more. But that's all we got for this video. Appreciate y'all for pulling up, and we are